What's going on? Welcome back to Fanatic Journey. So today we're going to talk to you about Rivian, give you a quick overview of some of the data points, break it down on what's causing all this volatility, and if today's pullback is justified or not. Before we get into any of that, make sure you guys hit that thumbs up, and with that, let's get right to it. So starting off, when it comes to Rivian, it is getting hit rather hard, down 6.58%, 1299 the low, 1406 the high. And so ultimately today's EV pullback is attributed to Trump. So post-inauguration pullback. And so I think in general, we came into this knowing that Trump and EVs didn't jive. But one thing that Trump did do that was somewhat out of left field was to quash the mandate by 2030. I didn't really see anyone ever talking about that, just people focused generally on that 7,500 tax credit going poof, but not the overall mandate. So again, that's what's really throwing a wrench in the EV market, because potential demand, future demand, might get hurt by that. And as well, I think right now Rivian is getting hit a little bit more than the other North American EVs, such as Tesla down 1.7, Lucid down 5.7, because of the anticipated cut in that 7,500 credit. So Tesla's already profitable. Lucid doesn't really qualify for it unless it's through leasing. So this is why Rivian is getting hit a little bit more than the other EVs. But other than that, though, no actual news associated to Rivian itself. Next big thing is going to be their earnings, which is on the 20th, so February the 20th, negative 65 cents for the earnings per share, and then 1.41 billion for revenue. Over the last 90 days, 10 positive and 5 negative revisions to the earnings per share. So I think this earnings is going to be absolutely key in order for Rivian to have any chance at really setting a good and changing the kind of downtrend that it is really on. Looking here though, the implied move for their earnings is 15.25%. So among the most volatile of all the earnings, aside from Q2 2024, which was at 15.71, then you had 17.99%. And as well, you can kind of just generally see the move day 1, day 3, 1 week after, and then 2 weeks. So historically speaking, over the last 2 weeks or 2 weeks after the last several earnings, it's always resulted in it being negative. So hopefully this time around, things will be different, but this earnings, there is a lot of high expectations on it, so just be aware of that. Right now, these are the recent analyst ratings, so you do have some recent ones. So last one was done 4 days ago, $14 price target. 𝗪𝗧𝗪𝗧𝗪, who has a 50% success rating. Then you also had a 14, 13, 12, and whatever else. Consensus of all of them is $14.33, and that does represent a 8.58% upside. So let me know your viewpoint on that. Moving over to some of the data, shorts right now are pouncing, increasing 2.45 million shares. 19.51% of the free float is being shorted. Works out to be 145.14 million shares overall are being shorted. And just generally, shorts are starting to double down once again. So not necessarily the best, but utilization is sitting at 51.99, and then through IBKR does indicate roughly around 700,000 shares is available to be shorted. So let me know your viewpoint on that in the comments below. Aside from that, moving over to options, 9.39 million in calls, 4.81 million in puts. 42% of all the options being done today are bearish in nature. And sorry, I kind of moved relatively fast. You can kind of see that right there. And on a side note, I know I do go relatively through the data fast. So if you want any further explanation, feel free to drop a comment in the description below. But right now, of the call options that are being purchased, you see a consensus for it to be above 1550, and then the bears are anticipating for it to be sub roughly around 1250. So somewhat a little bit more like evenly divided, a little bit more upside is anticipated potentially. But as of right now, these are all the transactions occurring on the secondary market above $100,000. So in comparison to a normal Rivian day, it is rather quiet. So again, big money is not really buying the Rivian dip as of right now. Not to say big money is not buying it. I guess I'm kind of saying it weird, but you guys get what I'm saying. The magnitude, the frequency isn't necessarily there. You have some kind of string of buying right here, but ultimately, I think people are just waiting for people just to find out what is coming next. Like obviously, oil is his priority, cutting and lowering the price of that. That in among itself will usually be a natural deterrent and kind of EVs. And now with potentially that 7,500 tax credit getting knocked down, maybe by February, I'd say, because that's when he does anticipate to do tariffs. So yeah, I think there is going to be a little bit more pain coming, and this is why, again, big money's not really buying the Rivian dip. But right now with at $13.30, it is trading between this pivot and this S1. 11.92 is going to be the next strong support. 13.44 is going to be the next strong target / resistance. On the actual chart itself, let's kind of go over here. On a side note, while I'm here, if you are looking for all this good information, so analyst forecast for upcoming earnings, ratings, ownership, everything under the sun, take a look at IBKR, completely free, with the link in the description below and also the comments. And actually, while I'm here, this is actually one thing that I generally don't like to see. And based on the latest 13Fs, it does look like institutions did reduce their position by 0.76%. Nothing really crazy, but retail did increase 24.12%. And why that might not be the best is because typically shorts absolutely love to target stocks that have a high retail ownership. So it's very easy to manipulate retail. So I think in essence, this is maybe why shorts are starting to really increase a little bit. But beside the point, definitely take advantage of IBKR in the description below. A lot of good information. But going back over here on the actual chart itself, so it is below the ALMA. Still above essentially all the key pivotal moving averages that I like to look at. So the 50-day moving average is $12.71. That's going to be the next strong support. And historically speaking, every time it does break below that 50-day moving average, usually results in roughly a 30 to 40% pullback in Rivian's case. So a lot more volatility is anticipated, especially if it does break below that. As you can kind of see right here, it did break it in August, and it didn't really resurface up until pretty much November. So a good $14 to $10 kind of pullback. So again, just watch for that essentially in the short term. But I really like Rivian. They made a hell of a lot of good progress recently. Their numbers in Q4 were absolutely on point, good, hitting the mark on the head. But for future guidance, that's also going to be one big determining factor whether their upcoming earnings is going to be seen as a success or not. So all in all, I think today's, for face value, it is a overreaction. But at the same time, the market is already starting to price in that 7,500 tax credit being gone, and that is why Rivian is getting hit a little bit more. So let me know your thoughts. Don't forget to hit that thumbs up and subscribe. I always greatly appreciate that. One final thing, I did launch a Patreon roughly around 2 months ago where I give buy signals on stocks, options, and crypto, and within that 2 months, massive bangers. Some doubled, some have even quadrupled. Many of the cryptocurrencies have gone up like 4x, huge wins. So definitely pop over there and take a look. Link in the description below and also the comments. With all that, appreciate all of you watching.